Iron ore miners got some reprieve yesterday after weeks of being crunched as the raw material prices dropped rapidly. So let's bring in here Commsec's chief economist, Craig James. Craig, always good to chat to you. This is important, isn't it, for Australia? What's the rationale behind this? Is this stimulus out of China or is it stockpiling?
Well, it tends to be a little bit of speculation more than anything else. We had one of the Chinese industrial companies coming out and saying it's the end of restocking and some of the furnaces, sort of getting back into gear. So it may be just a more cyclical thing rather than a structural thing. Of course, so the longer term situation in China is construction sector activity is weakening quite markedly. The hope is that what we'll see is infrastructure demand picking up, things like school and houses and roads and the like. If we see greater demand for steel coming from those sorts of areas, that could offset what we're seeing in terms of construction. We believe that is the situation that's going to occur. The Commonwealth Bank Group view is that while we may dip below $100 per tonne, the likely range in coming months is going to be between 100 and 110. And we've got to focus not just on the Chinese market. We've got India, the strong case in terms of India. If we look at global steel production, the expectation this year is something like 1.9%. If we look at India, it's something like a 7.7% growth we're going to see in steel demand that comes out of India. And that may be the next big story driving iron ore prices higher.
So one thing interesting here, Craig, is a lot of people have been talking about some big stimulus package coming out of China. But even though its economy is starting to slow, it's still growing much stronger than Australia's economy, but it is starting to ease off. And that, if you like, stimulus package has not come in the size or indeed in the timeliness that many expected.
Yeah, it's like waiting for Godot, in terms of this stimulus package. Maybe, the iron ore bulls basically holding out a degree of light. But certainly, what we did see in the latest reading in terms of the manufacturing purchasing managers index coming out of China, we saw a lift from 49.1 to 50.8. So any reading above 50 shows an expansion in the manufacturing sector. So the latest indicator was good. It was above 50 for the first time in 6 months and was the strongest reading we've seen in terms of a year. So there's hope in terms of that. There's the expectation in terms of China that they want to grow their economy at a 5% annual pace. The demographics, though, are working against it because their population now is shrinking rather than growing. And also in terms of the bullish side of the story is, again, the story coming out from India, as well as other countries around the Asia region in terms of demand for steel. But it's all important in terms of our budget. Something like a $10 decrease in the iron ore price has an impact in terms of the bottom line of the budget around about $500 million. So it is very, very important in terms of our budgetary position. The good news in terms of our budget, if you look at the rolling annual budget up to February, we're in a budget surplus, a record budget surplus of around about $26 billion.
Which is the reason why, of course, the Treasurer is now talking about cost of living relief, plus also those tax cuts that will come through. One other aspect of this, though, is it's always worth reminding people that the price that the government puts in the budget for iron ore is much, much lower, even than those current depressed prices that are on the markets.
Yeah, the expectation in terms of the mid-year economic outlook statement that came in December of last year was we'd see a movement from $100 a tonne down to $60 a tonne in September of this year. Now, September of this year is still some way off. It may achieve its objective, but it's still much higher than what the federal government's estimating, as you indicated.
So, therefore, as a result, all this has an impact, as even Ed was saying, on the Australian dollar very quickly.
Well, in terms of the Australian dollar, it has been pushed up, and certainly some of the analysts have been asking me today, why is the Aussie dollar higher? Some of the reasons in the United States, the expectation for lower interest rates in the United States later this year. But the other is the fact that iron ore prices and commodity prices are generally rising.
Yeah, I'll tell you what, Craig James, good to have you on the program. Many thanks for your time.